Friday, August 3. Next to this video is, this sounds ridiculous, but an unusually technical copy trying to explain Fed cycles, how to watch them and what the Fed is thinking about, and if you're brave, it's there. If you're a civilian and would still like to have some idea what's taking place, the Fed, for the first time in its modern history, has no predictive tools. The Fed maintains an econometric model, which is just a great big piece of software, into which you throw U.S. economic inputs and then fiddle with changes to see what happens. And it's known as FRBUS, which is FRB for Federal Reserve Board, U.S. as in United States, FRBUS. And the only problem with FRBUS is that it hasn't worked since about 2000. You put in inputs and you get answers that don't bear any relationship to the change in the economy. Now, this is troublesome for the Fed because all good central bankers know that you monkey with the cost of money, and then you have to wait 6 months, maybe a year, maybe 18 months until you see the full effect. Those lag times are probably shorter today because of all of these silly electrons that we live with. The reaction time in the world as a whole is most likely faster than we're used to, but the Fed doesn't know. So the Fed is reading the economy. Overnight cost of money has gone from 0.25% to 2% since December 2015. It's a very slow slope, but at 2%, and where the Fed goes now is going to begin to have effect. The Fed wants to be certain that a hot economy doesn't turn into inflation. The Fed's post-meeting statement on Wednesday, the new chair is a wonderful man who has shrunken the post-meeting statement now just to 4 paragraphs, but 6 times in 4 paragraphs used the word strong or a derivative of strong. There isn't any question the economy's cooking. Why is more a political matter than economic? How long? Nobody really knows. It looks self-sustaining. We got data this morning about July, about the job market, and it's all just behaving the way that it has been. So the Fed assumes that if we continue at this pace at some point, we're going to run into inflation. So the Fed would like things to slow down, would like economic growth at about 2% GDP, and we're running at least 3% annualized, and consistently so. But the Fed doesn't know how high do we take the cost of money to slow the economy down. There's a concept in central banking known as the neutral rate of interest. At what rate am I neither tight nor am I too easy? And the neutral rate is a theoretical rate. In the copy nearby, I make some fun of the neutral rate and how to think about it. But the Fed's memoranda to us say that they think the neutral rate of interest is somewhere high 2s. One principle that's pretty good: if the cost of money is less than the inflation rate, then money is free. If it's more than the inflation rate, then the Fed's beginning to not be easy, but not be necessarily tight either. So it's somewhere in there. The Fed is going to tighten in September. Unless the economy visibly slows down and slows down a lot, it's going to tighten in December. And same thing in maybe as early as February. If we actually see inflation, then the Fed's going to have to pick up the pace, and that's painful news for all of us, but there isn't any. The newest inflation data is just right smack at 2, or maybe even still just a hair under it. So the Fed neither has economic, regulatory, or political reason to lean harder. The long-term rates of interest don't yet really reflect where the Fed is going. So the assumption here is that there's a lagging effect just in the marketplace, a certain disbelief that the Fed is really going to keep going. And you see it in the propaganda coming out of Wall Street, this supposition that the economy is really slowing. No, it's not. Housing is slowing. No, it's not. We just don't have anything to sell. But we're still under 5 for most mortgages, most situations. And we may even stay here for a while, but every day we go into fall, the risk is on the upside, and I wouldn't fool with things like floating with the market. You want to get locked as fast as you can. Do enjoy August. Great month.